Hey everyone, welcome to the KE Report in a daily editorial on Wednesday, October 1st. We are in October. What a year it has been so far for a lot of markets, but especially the precious metals as they continue to outperform a lot of other financial markets out there. A lot for us to talk about on the gold, silver, and the underlying equities front as we're chatting with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. Dave, let's start off with gold, but silver also is tied into this, but really focused on gold here, where gold kind of took off in September and now into October. Still seems to be doing pretty well, but gold entered September right around, let's say, $3,500. And where we're at now is pretty close to $4,000. That's as we turn the calendar over into the final quarter. Dave, what is your assessment of this seemingly unrelenting bull market for gold, where doesn't matter what chart you're looking at, gold is in overbought territory? And if you look at the monthly chart, I don't know if it's ever been in this overbought territory when you look at the RSI.
Yeah, not since I've been following it. I mean, since the gold breakout above $250 way back in 2001, the monthly gold RSI above 90 has never happened until now. Gold was up $410 in September alone. It's clearly in a runaway here after we had the nearly 5 month symmetrical triangle breakout. After gold reached 3,500, we had a sharp correction. Then we had a consolidation for nearly 5 months. And now this move has been, like I said, $410 in September alone. And this morning, it came within 78 December gold futures came within $78 of that logarithmic target of $4,000. So, that's what we've been targeting here on the show for the past several months: $50 silver and $4,000 gold, and we're almost there. I think silver hit $48. Silver futures hit $48 this morning. So, yeah, it's incredible what we saw coming into the end of Q3 and the beginning of Q4 here, as the U.S. government shut down. Just another catalyst in a long line of catalysts as a strong wind at gold's back here. It's really been incredible to watch and to participate in.
Well, and Dave, we were talking about the health of the overall sector with you maybe a month or two back and saying it would be nice to see gold have another run rather than just keep channeling sideways, because it got stuck in that kind of 3,200 to 3,500 range for really after April, that big peak it had. It got stuck sideways channeling. And for the rest of the sector to have its next leg, it's nice to see gold as the prime mover have that other leg higher, but we can't ignore silver, the scrappy little brother of gold, kicking it in really even in a bigger way on percentage terms. So how do you balance out not just the strong monthly and quarterly close in gold at all-time highs, but really the strongest average quarterly price we've ever seen in silver?
Yeah, I mean, the previous quarterly high close in silver was 37.60, I think, and we had a close almost $10 above that. I think silver closed Q3 at 46 and change. I mean, that's incredible. And if you take a look at a long-term chart of the silver price, it's got that beautiful cup and handle, and that quarterly close above 46 is a breakout. It's a 45-year cup and handle breakout on the silver price. I mean, that is huge. I mean, look at what gold price did after it closed above a 13-year cup and handle pattern above 2,000. It's nearly reached 4,000 in 18 months. So that's a near double in 18 months. What's the silver price going to do? I mean, the gold price just recently moved above its CPI inflation adjusted high, and the silver price is still $100 below its CPI of inflation adjusted high, both reached in 1980. So it's really going to be something to participate in here. I mean, we've already, experienced these incredible gains in our junior stocks, in our mining stocks as well. But I mean, as we're waiting for this correction that everybody's been expecting for quite a while now, and it is going to happen. I mean, trees don't grow to the sky, and neither to gold stocks. So it's going to be interesting to see how this shakes out, because there's still a lot of money on the sidelines. I mean, for the first time in like 5 decades, we have fund managers now starting to, and banks starting to recommend gold related assets and precious metals in 60-40 portfolio has been the norm. But now there's been several saying 60% stocks, 20% bonds, 20% precious metals. And you've got even bond king Jeffrey Gundlach suggesting 25% stocks, 25% bonds, 25% cash, and 25% precious metals. So that is huge. That is a huge change in the financial landscape, this tiny precious metals market, because the gold stock sector, I mean, all the gold stocks in one basket is still just $650 billion.
Dave, one other thing that I guess we should outline here, and you were alluding to it there, is this catch up in silver. A lot of people look to that gold silver ratio, and back in May it was over 100. Now it's dropped the whole way down to 80. A lot of the silver bulls are still saying that it could go down to even 60, maybe even 50. You look at a long-term chart, I realize that's, I believe, the historical average, but for the last decade, it has been fairly well above that 50 to 60 level. Look, the fact of the matter is, when more investors come in and when they get more bulled up, they move into silver. Silver is more of that risk on play, and the silver stocks also more of that risk on play when it comes to silver and that gold silver ratio. What do you look at in that ratio? What are you expecting?
Yeah, if you take a look at that ratio, it's fascinating, right? We saw it go over 100. Myself and many analysts included were saying, hey, this is a huge buy alert for silver related stocks and assets. And, my boat was already loaded with silver juniors and silver mining stocks. But as far as the ratio is concerned, it's now moved close. It's moved down to 80 to 1 here. And the next major support is 75 to 1. That's going back several years. And below there, 30 to 1 was reached at the peak of the 2011 bull market. And 15 to 1 was reached back in that peak of 79.80 when the Hunt brothers attempted to corner the silver market.
Well, Dave, in light of people getting all bulled up on silver, which we see every cycle, that is something that happens a little bit later in the cycle where you see the catch-up trade in silver, where the silver stocks outperform the gold stocks. That is what we've been seeing the last couple of months at least, but really most of this year. And it brings in, the hot money. So a lot of people are worried, are we getting close to a peak here in the cycle? But then there's all these forecasts that say, hey, we could be running for a decade, or you just outlined the cup and handle and silver that's over 45 years old, that if it goes for as long as it could on an extension of that cup and handle, there could be a very long cycle. So how do you balance out where we're at currently and the danger of a correction to the sector and where it could be going? Do you have any parameters on the time frame that you're looking at here?
Yeah, I mean, short term, a correction could happen in the gold stocks in any day now, and I've been saying that for a while. But if you take a look at the GDX and GDXJ, they've going into this week, they experienced 8 consecutive weeks of solid gains with white candles, following Fed Chairman Jerome Powell's hinting of the renewal of central banks rate cuts in the Jackson Hole speech. And and then when they cut in the face of rising inflation, that's when gold stocks and gold and silver, that's when everything really started to take off. And both minor ETFs, they've also now closed above their respective weekly upper Bollinger Bands for an unprecedented 6 consecutive weeks. And if the gains hold this week, that'll be 7 consecutive weeks. So this argues that a sizable sell-off is imminent in the miners, just to rebalance these extreme overbought technicals and sentiment. But at the same time, many quality higher risk juniors still have plenty of catching up to do. If you take a look at the GDXJ, it came within $1 of resistance at 102 back in 2012. That's when gold stocks were starting to sell off after the main peak in 2011. But the 2011 peak in GDXJ was at 179. So that's almost 80% higher than where we are today. So short term, overbought, correction due, absolutely. But I still think there's plenty of money on the sidelines waiting to get in. So, I mean, I don't know how long a correction will last. And like I said, it probably will be sharp, but I don't think buying opportunities will last very long in this environment because we still got plenty of catching up to do. And also, if you look at the TSX Venture, I mean, the high it reached in 2007, it's still over, I think it's like 75% below its all-time high. It's coming up on major resistance at the 1,100 level. I think it's at 950 right now. And there's major long-term resistance there. So right where we sit right now, this is a really good place for some profit taking to happen, but it's going to happen only in select stocks that are extreme overbought with the sector. Like I said, there's still a lot of juniors that still have a lot of catching up to do.
Okay, that's what I was going to ask you because boy, oh boy, we keep hearing about just how well these stocks have done, and they have done well. A lot of these juniors, 2, 3x, just even the GDXJ is up almost 50% just in the last 2 months. GDXJ has been up 9 weeks in a row. It's a crazy move here, Dave. But look, this is kind of the balance between if you're an investor or a trader, or if you blend the two, because these stocks can still keep on running, especially on the back of good news, but the sector is due for a correction. So I classify you a bit more as an investor. You don't tend to trade in and out of positions very much. But if you're saying there's a profit taking opportunity, what does that mean? What do you do with that potential where it sounds like you might lighten up on some positions? Do you immediately recycle that money?
Great question. And that's what I've been doing. I have limit sell orders in partial positions in stocks that have tripled and more than tripled. So, I mean, I've expressed my selling strategy on the show before, where I don't get into any stock unless any junior, unless I see at least 3 times upside potential. And so it makes sense to me to where when that stock triples, as 6 of my 20 stocks in the Junior Miner Junky portfolio have done now, I have limit sell orders at that triple point. So that takes my original investment off the table, and it basically gives me a free ride to an expected merger or buyout from another company. So I've been accumulating cash that way. So I have about a 8 or 9% cash position in my account right now, waiting to deploy into some of these other higher risk juniors that are still below the radar of the market. They're fewer and far between. They're more difficult to find now, but they are out there. There's several turnaround stories that I'm looking at. Optionality plays, companies that have got millions of ounces in the ground and maybe just had a management change. Previous management was not doing the job correctly. They were raising too much money, or they were treating as a lifestyle company or what have you. There's a lot of companies like that now that where a new management team has come in, they've rolled back the share structure, and those millions of ounces are still there, but now they have a more competent management team with the proper vision to steer that project in the right direction. And some of them have even attracted strategic partners in major or mid-tier miners recently. So those companies are still out there. So those are the opportunities I'm looking at. I've put a few on my watch list, and I'm talking to these companies now, and I'm looking at possible entry points down the road with some of this cash.
Well, Dave, this brings up an interesting point about what to do with cash if you've rung the register. We had a discussion with a number of people at a dinner table at the MIFT over this last weekend, and I brought up this exact question, and I'd like to field it to you as well. When you harvest the gains, you got this cash, you did all this research and all this due diligence on the basket of companies you already have, and yeah, they got to a high level technically, so you rang the register. But if that stock that you loved last week, last month, last year pulls back by 20, 30%, why not buy back into it if you think there's still upside versus chasing a new one on the watch list? So how do you balance out putting the money that you've harvested back into the names that you already love? Do you love the ones you're with, or do you go find new lovers?
Well, first of all, ever since I started the JMJ portfolio again at the end of 2015, beginning of 2016, I've always taken out my realized capital gain. So basically, the initial investment capital has always remained, and my capital gains are always taken out. This is a very high risk sector, and gains are precious, and I like to keep them. So this is what I do. But as far as getting back into something after I've already taken some profits, I don't do that. I'd rather take that money, that investment capital, bank the realized capital gain, but the partial investment capital that was sold, I'll take that and I'll put it into something that I found that is undervalued, that I still see 3 to 10 times upside potential on.
So, Dave, what about other resource sectors then? There's a lot of juniors out there and a whole lot of other resources. I know we talk a whole lot about precious metals, and those have been running, but we have really been trying to focus on other areas within the resource market that still offer opportunity. So, anything you want to share with us in terms of rotation out of precious metals into something else?
Yeah, sure. I'm still focusing on gold, silver, and copper. So I've said in the past I'd like to have more copper exposure. The last junior that I recommended and that I purchased for the portfolio was a copper junior. I have a few others that are on my list that I'm closely watching right now. I'm having conversations with the management teams, and like I said, I'm looking for entry points, and valuation levels. I'm looking at comparable valuations, even though a stock has gone up, maybe 2 or 3 times, it still may be undervalued in relation to its peers, and the metal they have in the ground still may be very undervalued as well. So just because a stock has moved up 2 or 3 times doesn't mean it's not a good time to start accumulating it.
Well, and it brings up another question. If we see a correction in the precious metals, there are stocks right now that look undervalued compared to the rest of their peers. But if the whole sector got hit across the board, and even the best of the best or the mid, the medium of the best, it's kind of like average, but the above average, if they all go on sale, would you be more tempted to take a flyer on one that's now super beat up, or would you be more tempted to buy quality on sale?
Yeah, I mean, that's a great question. It all depends on the stock. It depends on the management team. It depends on the asset. It depends on a lot of things. But yeah, I mean, but right now I'm looking into higher risk, higher reward juniors, because that's where I see the value. Optionality plays, gold optionality plays, companies that've got millions of ounces in the ground, but they're still undervalued to the market and under the radar to the market.
Well, Dave, we'll follow up with you if we get this correction, and then hear what you think has really been sold off the most. But right now, yes, it does seem like every week we're waiting for a correction, and every week these stocks keep moving higher, the small ones and some of those good mid-tier ones. So it can be hard to sell in the face of consistently rising prices. I get that, but there's also nothing wrong with taking a couple or a little bit of profit, still holding a large position there and at least locking in some of these gains. But again, boy, oh boy, these stocks just keep on running. We'll wrap it up here, Dave. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Always great chatting with you, Dave, especially in a bull market. We'll chat with you again next week.
Looking forward to it, guys. Thanks a lot.